Qualifying a buyer is a key skill tested on the SAFE MLO exam. It involves knowing how to assess income, debt, credit, and other factors to determine eligibility for a loan. In this video, we'll cover evaluating income and employment, assessing credit and debt ratios, and determining loan eligibility. And don't miss what's happening in the bottom corner. It's designed to supercharge your exam prep. We'll explain more in just a minute. Let's dive in and get started.
Let's start with a review of creditworthiness assessment. Creditworthiness factors, for example, payment history, income, stability. A loan officer is reviewing a client's application and notices a stable income but a history of late payments. Which factors should weigh more heavily in assessing creditworthiness? Is it A, stable income, B, payment history, C, length of employment, or D, credit inquiries? The answer is B, payment history. Payment history is a critical factor in creditworthiness as it reflects the client's reliability in meeting financial obligations. During a creditworthiness assessment, a borrower presents a high income but has recently changed jobs. What should the lender focus on to evaluate stability? Is it A, current income level, B, credit score, C, employment history, or D, debt-to-income ratio? The answer is C, employment history. Employment stability is crucial, as frequent job changes can indicate financial instability despite high income.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsey.ai for immediate help and a free study session with Birdsey, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
A client with a strong credit score and consistent payment history is applying for a loan but has a high debt-to-income ratio. What should the lender consider most? Is it A, credit score, B, payment history, C, income stability, or D, debt-to-income ratio? The answer is D, debt-to-income ratio. A high debt-to-income ratio can indicate potential difficulty in managing additional debt despite a strong credit score. A borrower has a moderate credit score but demonstrates a long history of stable employment. How should this affect their creditworthiness evaluation? Is it A, positive impact due to employment stability, B, negative impact due to moderate credit score, C, neutral impact as both factors balance, or D, focus on improving credit score? The answer is A, positive impact due to employment stability. Stable employment history can offset a moderate credit score by indicating reliable income and potential for financial recovery. A client with a low credit score applies for a loan but has recently received a significant salary increase. What should the lender prioritize in their assessment? Is it A, recent salary increase, B, current employment status, C, credit score, or D, future earning potential? The answer is C, credit score. A recent salary increase can improve future financial stability, but the low credit score indicates past financial behavior that needs consideration. A loan officer is evaluating a client's creditworthiness and notices the client has a high income but a recent history of missed payments. Which factor should be prioritized in this assessment? Is it A, income level, B, employment stability, C, payment history, or D, credit inquiries? The answer is C, payment history. Payment history is a critical factor in creditworthiness, as it reflects the borrower's reliability in meeting financial obligations. A borrower with a moderate income and a stable job history applies for a loan, but has a high credit utilization ratio. What should the lender focus on to assess creditworthiness? Is it A, income stability, B, job history, C, credit score, or D, credit utilization ratio? The answer is D, credit utilization ratio. A high credit utilization ratio can indicate financial overextension, impacting the borrower's ability to manage additional debt. A client with a low credit score has a long history of stable employment and a recent increase in income. How should this affect their creditworthiness evaluation? Is it A, focus on credit score, B, consider employment stability, C, prioritize recent income increase, or D, evaluate credit inquiries? The answer is B, consider employment stability. Stable employment and increased income can offset a low credit score by indicating improved financial stability and repayment capacity.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsey.
A borrower with a strong payment history but fluctuating income applies for a mortgage. What should the lender emphasize in their creditworthiness assessment? Is it A, payment history, B, income stability, C, debt-to-income ratio, or D, credit score? The answer is A, payment history. A strong payment history indicates reliability in meeting financial obligations, which can outweigh income fluctuations. A client with a high income and excellent credit score has recently taken on significant new debt. What factors should the lender scrutinize most closely? Is it A, income level, B, credit score, C, employment stability, or D, current debt obligations? The answer is D, current debt obligations. New debt can impact the client's ability to manage additional credit, making it crucial to assess their current debt obligations. A loan officer is assessing a client's creditworthiness and notes that the client has a stable job history but a high credit utilization ratio. Which factor should the officer prioritize in this evaluation? Is it A, stable job history, B, recent salary increase, C, credit utilization ratio, or D, length of credit history? The answer is C, credit utilization ratio. A high credit utilization ratio can indicate potential financial strain, which may outweigh the benefits of stable employment in assessing creditworthiness. A borrower with a moderate credit score and a history of late payments applies for a loan. However, they have recently secured a high-paying job. What should the lender focus on to assess creditworthiness? Is it A, moderate credit score, B, history of late payments, C, high-paying job, or D, debt-to-income ratio? The answer is B, history of late payments. The history of late payments is a significant indicator of past financial behavior and may outweigh recent income changes in assessing creditworthiness. Factors prohibited under ECOA. A loan officer is reviewing a mortgage application and notices the applicant's marital status. How should the officer proceed in assessing creditworthiness? Is it A, ignore marital status and focus on financial factors, B, consider marital status to assess financial stability, C, ask for additional documentation related to marital status, or D, include marital status as a secondary consideration? The answer is A, ignore marital status and focus on financial factors. Under ECOA, marital status cannot be used to assess creditworthiness. The officer should focus on financial factors like income and credit history. During a credit application review, a lender notices the applicant's race is indicated on the form. What is the appropriate action for the lender? Is it A, use race to determine potential risk factors, B, Disregard race and evaluate financial data only. C. Request additional information about the applicant's background. Or D. Include race as a factor in the risk assessment model. The answer is B. Disregard race and evaluate financial data only. Race is a prohibited factor under ECOA. The lender should disregard it and focus on the applicant's financial information. A credit analyst is evaluating a loan application and notices the applicant's gender. What should the analyst do? Is it A. Consider gender to predict spending habits? B. Ask for more information regarding gender identity? C. Ignore gender and assess based on financial data? Or D. Include gender as a factor for demographic analysis? The answer is C. Ignore gender and assess based on financial data. Gender is a prohibited factor under ECOA. The analyst should focus on objective financial criteria instead. An underwriter is processing a loan application and sees the applicant's age. How should the underwriter proceed? Is it A. Use age to assess potential longevity of income? B. Consider age as a factor in risk assessment? C. Request additional documentation related to age? Or D. Ensure the applicant is of legal age and focus on financial data? The answer is D. Ensure the applicant is of legal age and focus on financial data. Age can be considered only to determine if the applicant is of legal age to enter into a contract, not for creditworthiness. A bank officer is reviewing a joint credit application and notes the applicant's marital status. What should the officer do? Is it A. Use marital status to assess joint financial responsibility? B. Focus on the applicant's combined financial data? C. Request a detailed explanation of their marital situation? Or D. Include marital status as a factor in the credit score? The answer is B. Focus on the applicant's combined financial data. Marital status should not affect credit decisions. The officer should evaluate the application based on financial criteria. A loan officer receives a credit application where the applicant has voluntarily disclosed their gender. How should the officer proceed in evaluating the application? Is it A. Consider the gender information as part of the credit evaluation? B. Ignore the gender information and focus on financial factors? C. Request additional personal information to verify the gender disclosure? Or D. Discuss the gender disclosure with the applicant to ensure accuracy? The answer is B. Ignore the gender information and focus on financial factors. The officer should ignore the gender information as it is prohibited under ECOA to consider gender when assessing creditworthiness. A credit analyst is reviewing a loan application and notices the applicant's race is mentioned in a supplementary document. What is the appropriate action for the analyst? Is it A. Include the race information in the credit assessment? B. Contact the applicant to confirm the race information? C. Disregard the race information and focus on credit history and income? Or D. Use the race information to offer tailored loan products? The answer is C. Disregard the race information and focus on credit history and income. The analyst should disregard the race information as it is not a permissible factor under ECOA for creditworthiness assessment. A bank officer is processing a credit application and notices the applicant's marital status is marked as single. How should the officer handle this information? Is it A. Use marital status to assess the applicant's financial stability? B. Ask the applicant to provide a spouse's financial information? C. Consider marital status only if the applicant is applying for a joint account? Or D. Ignore the marital status and evaluate based on credit score and income? The answer is D. Ignore the marital status and evaluate based on credit score and income. The officer should not consider marital status as it is a prohibited factor under ECOA when assessing creditworthiness.
Stuck on a question? Just think of the Birdsey link in the description as your friendly neighborhood superhero, swooping in to save the day with answers. Feel free to explore it now and return to continue. Simply hit pause, and we'll be waiting when you get back.
Application data required by Regulation B. During a creditworthiness assessment, Maria, a loan officer, notices that an applicant has not provided their marital status. What should Maria do according to Regulation B? Is it A, proceed without the information? B, request the information if the credit is secured? C, automatically deny the application? Or D, assume the applicant is single? The answer is B, request the information if the credit is secured. Regulation B requires that marital status be collected only when necessary for the credit transaction, such as for joint accounts or secured credit. John, a mortgage broker, receives an application missing the applicant's race. How should John proceed under Regulation? Is it A, reject the application? B, fill in the information based on observation? C, note the information was not provided? Or D, contact the applicant to insist on completion? The answer is C, note the information was not provided. Regulation B requires lenders to request demographic information for monitoring purposes, but applicants are not required to provide it. Samantha, a credit analyst, is reviewing an application where the applicant has not disclosed their age. What is the appropriate action under Regulation B? Is it A, request the age if it affects credit terms? B, ignore the missing information? C, assume the applicant is over 21? Or D, automatically approve the application? The answer is A, request the age if it affects credit terms. Regulation B prohibits discrimination based on age, but age can be considered if it is a valid predictor of creditworthiness. A lender receives an application where the applicant has not provided their income. What should the lender do according to Regulation B? Is it A, approve the application without income? B, deny the application immediately? C, estimate the income based on job title? Or D, request the applicant to provide income details? The answer is D, request the applicant to provide income details. Income is a critical factor in assessing creditworthiness, and lenders can request this information to make an informed decision. An applicant submits a credit application without specifying their citizenship status. How should the lender handle this under Regulation B? Is it A, assume the applicant is a U.S. citizen? B, request the citizenship status for credit terms? C, ignore the missing information? Or D, deny the application due to incomplete data? The answer is B, request the citizenship status for credit terms. Regulation B allows lenders to request citizenship status, as it can affect credit terms, but it must be handled without discrimination. During a creditworthiness assessment, Lisa, a loan officer, finds that an applicant has not provided their employment history. How should Lisa proceed according to Regulation B? Is it A, approve the application based on available data? B, request the applicant to provide their employment history? C, reject the application due to incomplete information? Or D, proceed with the assessment using alternative data? The answer is B, request the applicant to provide their employment history. Regulation B requires lenders to consider all relevant information provided by the applicant. Lisa should request the missing employment history to complete the assessment. A lender is reviewing an application where the applicant has not disclosed their credit card debt. What is the appropriate action under Regulation B? Is it A, approve the application without considering credit card debt? B, reject the application due to incomplete debt information? C, request the applicant to provide details of their credit card debt? Or D, estimate the debt based on industry averages? The answer is C, request the applicant to provide details of their credit card debt. Regulation B allows lenders to request additional information necessary for assessing creditworthiness, including undisclosed debts. Tom, a credit officer, notices that an applicant has not provided their address on the application. What should Tom do according to Regulationb? Is it A, contact the applicant to obtain their address? B, proceed with the application without the address? C, reject the application due to lack of address? Or D, use a previous address from another application? The answer is A, contact the applicant to obtain their address. Regulation B allows lenders to request additional information necessary for processing the application, such as the applicant's address. A credit analyst, Sarah, is processing an application missing the applicant's signature. How should Sarah handle this under Regulation B? Is it A, approve the application without the signature? B, reject the application immediately? C, proceed with the assessment using verbal confirmation? Or D, request the applicant to provide their signature? The answer is D, request the applicant to provide their signature. Regulation B requires a complete application, including the applicant's signature, to proceed with the creditworthiness assessment. An applicant submits a loan application without specifying their income source. How should the lender proceed according to Regulation? Is it A, approve the application based on stated income? B, request the applicant to provide their income source? C, reject the application due to incomplete income information? Or D, estimate the income source based on industry standards? The answer is B, request the applicant to provide their income source. Regulation B allows lenders to request additional information necessary for assessing creditworthiness, including income sources. Circumstances permitting loan denial. John applies for a mortgage, but his credit report shows multiple recent delinquencies. Under ECOA guidelines, can the lender deny his application based on this information? Is it A, yes, because recent delinquencies indicate credit risk? B, no, because delinquencies alone cannot determine creditworthiness? C, yes, but only if the delinquencies exceed a certain amount? Or D, no, because ECOA prohibits denial based on credit history? The answer is A, yes, because recent delinquencies indicate credit risk. Lenders can deny a loan if the applicant's credit history shows recent delinquencies, as it indicates a potential inability to repay the loan. Maria's loan application is denied because her income is deemed insufficient. What must the lender provide to comply with ECOA? Is it A, a copy of her credit report? B, a specific reason for the denial? C, an opportunity to reapply with a cosigner? Or D, a list of alternative loan products? The answer is B, a specific reason for the denial. ECOA requires lenders to provide a specific reason for denial, such as insufficient income, to ensure transparency. A lender denies a loan application because the applicant is on temporary leave from work. Is this permissible under ECOA? Is it A, yes, because temporary leave affects income stability? B, no, because all applicants must be treated equally? C, no, because temporary leave is protected under ECOA? Or D, yes, if the leave is unpaid? The answer is C, no, because temporary leave is protected under ECOA. ECOA prohibits discrimination based on temporary leave status, as it is considered a form of employment discrimination. A lender denies a loan application due to the applicant's high debt-to-income ratio. What must the lender do to comply with ECOA? Is it A, offer a lower loan amount, B, provide a copy of the debt-to-income calculation, C, suggest financial counseling services, or D, notify the applicant of the specific reason for denial? The answer is D, notify the applicant of the specific reason for denial. ECOA requires lenders to inform applicants of the specific reason for denial, such as a high debt-to-income ratio. Sarah's loan application is denied due to insufficient collateral. What action should the lender take to comply with ECOA? Is it A, inform Sarah of the specific reason for denial, B, offer a higher interest rate instead, C, suggest alternative collateral options, or D, provide a detailed appraisal report? The answer is A, inform Sarah of the specific reason for denial. ECOA requires lenders to provide a specific reason for denial, such as insufficient collateral, to ensure applicants understand the decision. Emily applies for a personal loan, but her credit history reveals a bankruptcy filed 2 years ago. Can the lender deny her application based on this information? Is it A, yes, because recent bankruptcy affects creditworthiness, B, no, because bankruptcy should not impact loan decisions, C, yes, but only if there are other negative credit factors, or D, no, unless the bankruptcy was fraudulent? The answer is A, yes, because recent bankruptcy affects creditworthiness. A bankruptcy filed within the last 7 years is a valid reason for loan denial under ECOA, as it reflects on the applicant's creditworthiness. David's loan application is denied because his employment history shows frequent job changes. Is this a permissible reason for denial under ECOA? Is it A, no, employment history should not affect loan decisions, B, yes, because it suggests income instability, C, no, unless the job changes resulted in lower income, or D, yes, but only if the applicant is currently unemployed? The answer is B, yes, because it suggests income instability. Frequent job changes can indicate instability in income, which is a valid concern for lenders assessing creditworthiness under ECOA. Lisa's loan application is denied because she has a history of late payments on her credit card. Is this a valid reason for denial under ECOA? Is it A, no, late payments should not impact loan decisions, B, yes, if the late payments occurred within the last year, C, yes, because it reflects on repayment ability, or D, no, unless the late payments were on multiple accounts? The answer is C, yes, because it reflects on repayment ability. A history of late payments indicates potential risk in repayment ability, which is a valid reason for loan denial under ECOA.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsey.
Adverse action notice timing and contents. A loan officer at XYZ Bank denies a mortgage application due to insufficient credit history. What must the officer include in the adverse action notice to comply with ECOA requirements? Is it A, a general statement of denial, B, a copy of the applicant's credit report, C, specific reasons for the credit denial, or D, a list of all potential lenders? The answer is C, specific reasons for the credit denial. The ECOA requires that the notice include specific reasons for denial to help the applicant understand and potentially improve their creditworthiness. After reviewing a loan application, a credit union decides to deny the application. How soon must they send the adverse action notice to the applicant? Is it A, within 15 days, B, within 30 days, C, within 45 days, or D, within 60 days? The answer is B, within 30 days. ECOA requires that the adverse action notice be sent within 30 days of receiving a completed application. A borrower receives an adverse action notice stating their loan was denied due to other reasons. How does this comply with ECOA requirements? Is it A, it fully complies as it informs the borrower of denial? B, it partially complies by notifying the borrower? C, it complies if further details are provided upon request? Or D, it does not comply due to lack of specificity? The answer is D, it does not comply due to lack of specificity. ECOA requires specific reasons for denial. Other reasons is too vague and non-compliant. A bank denies a credit card application and sends an adverse action notice. Which of the following must be included to comply with ECOA? Is it A, the applicant's right to request specific reasons for denial? B, the applicant's credit score? C, a list of alternative credit options? Or D, a copy of the bank's credit policy? The answer is A, the applicant's right to request specific reasons for denial. ECOA requires the notice to include the applicant's right to request the specific reasons for denial. A financial institution denies a loan application and sends an adverse action notice. What is the consequence of failing to include the creditor's contact information? Is it A, no consequence if the applicant doesn't request it? B, non-compliance with ECOA requirements? C, the notice is still valid if sent within 30 days? Or D, the applicant must be notified separately? The answer is B, non-compliance with ECOA requirements. ECOA requires creditor contact information in the notice to allow applicants to inquire further, and failure to include it is non-compliant. Maria, a loan officer at ABC Credit Union, denies a car loan application due to the applicant's high debt-to-income ratio. What specific information must Maria include in the adverse action notice to comply with ECOA requirements? Is it A, a general statement of denial? B, the applicant's credit score? C, the specific reason for denial? Or D, a list of all possible reasons for denial? The answer is C, the specific reason for denial. The adverse action notice must include the specific reason for denial, such as high debt-to-income ratio, to comply with ECOA requirements. John, a mortgage broker, receives a completed loan application on October 1st and decides to deny it on October 10th. By what date must John send the adverse action notice to the applicant to comply with ECOA timing requirements? Is it A, October 20th, B, October 31st, C, November 10th, or D, November 1st? The answer is B, October 31st. ECOA requires that the adverse action notice be sent within 30 days of receiving a completed application. Action when borrower refuses demographic data. During a loan application process, a borrower named Alex refuses to provide demographic information. How should you proceed according to ECOA guidelines? Is it A, insist on obtaining the information? B, note the refusal and continue processing the application? C, cancel the application due to incomplete information? Or D, estimate the demographic data based on visual observation? The answer is B, note the refusal and continue processing the application. ECOA requires lenders to note the refusal and proceed with the application without demographic data, ensuring no discrimination occurs. While processing a mortgage application, Jamie, the applicant, declines to provide race and ethnicity information. What is the appropriate action under ECOA? Is it A, Reject the application for non-compliance. B. Estimate the information based on surname. C. Request the information again at a later stage. Or D. Proceed with the application without the demographic data. The answer is D. Proceed with the application without the demographic data. ECOA requires lenders to respect the applicant's choice and continue processing the application without demographic data. A client named Maria refuses to fill out the demographic section of her loan application. What should you do in compliance with ECOA? Is it A. Document the refusal and continue with the application? B. Inform Maria that her application cannot proceed? C. Estimate her demographic data based on her appearance? Or D. Ask Maria to reconsider her decision? The answer is A. Document the refusal and continue with the application. ECOA requires that the refusal be noted and the application processed without demographic data, ensuring non-discrimination. During a creditworthiness assessment, a borrower named Sam refuses to provide demographic information. What is the correct course of action under ECOA? Is it A. Reject the application due to missing information? B. Estimate the demographic data based on the borrower's name? C. Proceed with the application without the demographic data? Or D. Request the information from a co-applicant? The answer is C. Proceed with the application without the demographic data. ECOA mandates that lenders respect the borrower's decision and continue processing the application without demographic data. A borrower named Lisa declines to provide her demographic information during the loan application process. What should you do according to ECOA? Is it A. Insist on obtaining the information? B. Estimate the demographic data based on her voice? C. Cancel the application due to incomplete information? Or D. Note the refusal and continue processing the application? The answer is D. Note the refusal and continue processing the application. ECOA requires lenders to respect the borrower's decision and continue processing the application without demographic data.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit birdsey.ai for complimentary study sessions with Birdsey, your AI-powered study partner.